Hey guys, Bryan Lebo here with a quicker than normal update for July. Now, overall, the market's fantastic right now, and as you'll see, the numbers really show it. So let's go ahead and dig right into it. Okay, first up is the NODs, or Notice of Defaults. I've heard a lot of rumbling lately about the potential for increased foreclosures in the future, but I'm not really seeing that. As you can see on the screen right now, last month we had roughly 680 defaults filed. All year, these numbers have been quite consistent between 650 and 900. Ultimately, foreclosures were only 5% of the market when we opened the year, and now they're down to 3.3%. So, long story short, don't expect to see an influx of foreclosures on the market anytime soon. Next up are the current inventory levels. As you can see on the screen now, we finished the month with 7,319 homes on the market. Now, this was a 1% increase over the previous month. Realistically, our inventory hasn't really changed much in an entire year. It's still considered a low amount of inventory and therefore a seller's market. If you watched last month's video, you know that it's never quite so easy to say that it's a seller's market or a buyer's market though. It really depends on the price range and the area. All right, now let's check in on the actual sales. Last month was actually an amazing month for a couple of reasons. First, it was the highest sales month of the year at 2,853 homes sold. Now, normally sales peak in May and then start to decrease slightly as the summer continues. Instead, sales were up 10% in June over May and was a 13% increase from last June. So, since sales were up, what effect did that have on prices? Well, just like the sales, our median price literally jumped through the roof last month. Median prices somehow jumped up 5% in just 1 month. That's just insane. We went from $210,000 in May to $220,000 last month. The best way for me to explain what's happening with home values is to just show you. Over the past 12 months, you can see that prices barely increased at all until 3 months ago. Now, over the past 3 months, prices have increased almost 10%. Now, before we wrap this up, let's break down our current inventory. As you can see on the screen now, 10% of our market are short sales, 3% of our market are foreclosures, and 86% are traditional sales. The more prices increase, the fewer amount of short sales we're going to see. As we covered earlier, there aren't very many foreclosure filings, which in return means there aren't going to be very many foreclosure listings in the future. Since the beginning of the year, short sales are down over 3% and foreclosures are down about 2%. So let's wrap this all up. Foreclosure activity is still slow. Our inventory levels have been very consistent and our sales have been through the roof with increased home values. So where are we going? Like I went into great detail last month, the market is somewhat divided in two. Homes under $300,000 are selling very easily, and the competition is much greater. Over $300,000, it really just depends greatly on the area and the specific price range. While the median prices are up 10% in only 3 months, most of what I'm seeing is on the lower end of the market increasing, and it's increasing dramatically. The lower the price, the higher the increases have actually been. Ultimately, I think the market is very fair right now, and while I think it's absurd to think that prices are going to be going down anytime soon, I also don't think we're going to see price increases too much more for the second half of this year. Now, if you're looking to sell, now is still the best time, especially if you're looking to sell a home that's typically a family home, since school is about to start up soon. So normally, every month that goes by, sales start to decrease. So you really don't want to miss out on the large volume of buyers that are out there right now. If you're looking to buy, however, it depends on your price range. The lower the price range, the greater your sense of urgency should be. While a few grand on a $500,000 home doesn't really make much of a difference to most buyers, A few grand on a $200,000 home could actually be the difference between qualifying for a loan and not qualifying for that loan. So if you're looking for a home on the low end of the market, you still need to be very aggressive right now. If you're looking on the higher end of the market, you have plenty of time, plenty of options, and really the market only gets a little better for you as the year progresses into these holiday months. Well, that's it for July's update, everyone. Thank you again for watching. Please click here to subscribe and have a wonderful month.